How do you look at the rules that are in place from banks and venture capital and other financial institutions, and then look at the stakeholders that are already trying to help drive progress, and then how do we kind of accelerate that process using unbiased data? And that's what EQUILIBERTY is doing. We're essentially a convener in the community, and we're taking data approach to figure out a way to get more capital at a lower level so that more people can actually reach the capital market and start participating in a meaningful way. But we want to be in a position to give them the resource they need to show that it works. Two things can happen. One, you can take advantage of these free resources or community-based resources to build something special for your community and find out, hey, this is the journey for you, and you may not even need venture capital. Or on the other side, you find out that this might not be the approach for your wealth building. Maybe you should be an employee. Maybe you should be an independent contractor. Everybody has an idea. Everybody has a purpose. You just got to figure out where your lane is.
At Softtech, we don't just follow the trends, we set them. As the founder and CEO, I've built a team that excels in delivering cutting-edge solutions in software, hardware, and IoT. From concept to completion, we're the partner that turns your tech dreams into reality. Softtech, where innovation starts. Welcome to Forging the Future, and I'm sitting down today with Phillip Yates, the co-founder of EQUILIBERTY. Hey, Phillip.
All right, Chris.
Thanks for coming on the show.
Thank you for having me. Happy to be here.
Yeah, I'm looking forward to this conversation. Why does access to capital remain such a barrier for so many?
You know, it's a good question, and it's a question that we're trying to solve through EQUILIBERTY, because we know it's not just financial capital that we're talking about when we talk about access. It's access to social capital. It's access to human capital. And obviously, to get a lot of that, you need financial capital. And it means a lot because if you're, everybody has an ideas. Everybody has the ability to dream. Everybody wants to pursue wealth. Everybody wants to create opportunities and impact. But as you start that pursuit, we find out that, it's easy to go to the Secretary of State and file an incorporation. But after that, you actually have to build a company, and you can't build a company without capital. And so it's important. And so it means so much to me, so many people, because as you even stated in your beginning, people have these ideas, and without it, sometimes it goes to the grave with them. And so we want to do something about that to figure out how can we solve this problem so more people get a chance to live out their dreams and their purpose.
Mm-hmm. And so there's still just barriers to access to getting that capital.
Oh, there's systemic barriers. I think there's geographical barriers. There's barriers just institutional that everybody goes through, no matter if you're from a diverse community or not. There's just barriers to getting capital. But then when you start talking about, okay, from a certain zip code that you're from, because of where you reside, you have certain challenges that it's almost impossible for you to overcome, certainly in your lifetime.
Mm-hmm. And EQUILIBERTY helps solve that problem?
EQUILIBERTY is doing its part to help solve that problem. We're a convener. So by trade, I'm an attorney. And so looking at EQUILIBERTY, we try to take a holistic approach to say, how do you look at the rules that are in place from banks and venture capital and other financial institutions, and then look at the stakeholders that are already trying to help drive progress, and then how do we kind of accelerate that process using unbiased data? And that's what EQUILIBERTY is doing. We're essentially a convener in the community, and we're taking a data approach to figure out a way to get more capital at a lower level so that more people can actually reach the capital market and start participating in a meaningful way.
Explain that word, convener. What does that mean exactly?
Yeah, it's kind of funny because I didn't use that word prior to being an entrepreneur. But once I really truly realized what I wanted to do as a co-founder of EQUILIBERTY is that you want to make sure that things that are in place, how do you make them work properly? How do you speed it up in an equitable manner? And so conveners basically is using our technology to accelerate what's already in place in the community. I'll say case in point, right now we've been fortunate to have some really strong partners with banks, some nonprofits, and we started programs like Latino Entrepreneurs Week, Black Entrepreneurs Week, and even doing some other things with YEW and AEW. Well, it's not the fact that these banks aren't doing their job or these nonprofits aren't doing their job. It's the fact that sometimes there's somebody who, because of where they're from, where they reside, they may not become aware of those opportunities. They may not be in a position to take full advantage. And so leveraging our technology platform, we put them into an ecosystem that allows them to be convened by the resources that are there to put them on the right pathway so that they too can try to pursue their dreams and opportunities and eventually get access to capital. Yeah.
And so is it more of just a lack of awareness for those individuals of what exists to help them, or was it important to anonymize the data in a way to provide that more equal access, or a little of both?
Yeah, I think it's a little of both, right? Because there's definitely an awareness, because if you've never experienced it, how can you be aware of it? I mean, we all go to school, and I know we all learn about how the economy works and so on and so forth. But the reality is, when it comes to wealth building, you only know what you've seen, what you've been able to participate in, and what you've been welcome to. And so that it isn't a level of awareness, but it's also making sure that you can meet people where they're at, and so that you can introduce them to the resources that may help accelerate their growth. I know when we first started this journey, a lot of our institutional stakeholders believed that it was maybe for social good and you're going into a community where people are just impoverished. Yeah, that's the case. We do want to help those people, but there's some people who are considered upper or lower or basically middle class that, because they may be the first generation graduate or they may be the first entrepreneur in their family, they don't know ways to grow, expand, or build capacity. And that's also a part of that access to capital initiative that we're trying to solve with EQUILIBERTY.
So if I'm a founder here in Houston, I mean, what's kind of the target for EQUILIBERTY? Who's actually coming to you for help and for what?
Yeah, it's funny. It's anybody who has access to capital problem. Yeah. We believe that, and our main consumers are going to be banks and VCs, because we're giving them an ability to use unbiased data to create a customer pipeline. And so through those partnerships, we know that there's going to be consumers situated, whether they're first-time home buyers or they're first-time business owners, first-time tech founders that are trying to figure out a way to navigate the markets. And that's where we come in. We come in and say, hey, if you do everything that statistically you're supposed to do, then we'll capture that data and we'll position you to get capital. And then some of the partners we're working with, we're actually creating our own capital arm so that we can give them some of that experimental data or capital so that they can now prove themselves. That's another issue that we have, Chris, where people can go through accelerators, incubators, work till their face turns blue. But that doesn't automatically give you opportunities to get the capital you need to show that your alpha, your beta product works. Well, we want to be in a position to give them the resource they need to show that it works, so that now we can say, hey, look here, VC, or look here, microbank. This person has the data that shows they have customer acquisition, they're operating, and now they're shown they can be a good steward of resources.
So it's not like a venture investment. It's access to capital in ways like getting a loan or getting non-dilutive financing or getting a grant or something like that.
Yeah, we're looking at it as a holistic approach where at the first couple of years we leverage pitch competitions, which is basically grant dollars. And it's a key indicator that, okay, you can put X amount of founders in a room. They'll train themselves. You'll increase their financial literacy. They'll present themselves, and in some cases, they'll show their ability to acquire customers, which is all most financial institutions should be looking for. And then those who present themselves in the best manner, we'll give them capital, and then we'll also put them in front of those VCs and those banks, who then can now court them so they can be a future customer or client. But we want to take that a step further as we continue to grow EQUILIBERTY, where we want to have both equity and debt instruments, where at the lowest level possible, where we can lower that barrier to capital, that we can show that if you give somebody, let's say $50, and they are able to pay that money back, that should actually give them credibility, so that as they move forward in the marketplace, now somebody can look back and say, okay, this founder, although they're from this community, although they don't have this experience, they do have some credibility where they can be a steward of resources.
Yeah, a lot of founders I think they need to go and get VC dollars, but there's a lot of different types of dollars out there, and not all businesses are venture backable,
That's right.
and especially in the beginning. And you're not necessarily going to 100x the investment, but there's a lot of great businesses out there that can be started where, if you can get, if you don't have, angels, or you can't self-fund it, leveraging grants and leveraging competitions is one way to grow your business.
Yeah, I think that's one of the things we try to pride ourselves on, especially on the foundation side of EQUILIBERTY, is that there's certain people from certain communities who, because they lack the experience or they may not have access to angels in their network, why make them pay to make mistakes, right? And so two things can happen. One, you can take advantage of these free resources or community-based resources to build something special for your community and find out, hey, this is the journey for you, and you may not even need venture capital. Or on the other side, you find out that this might not be the approach for your wealth building. Maybe you should be an employee. Maybe you should be an independent contractor, because just like every business is not shouldn't be venture backed, everybody shouldn't be a founder.
Yeah.
And I think you need spaces for people to figure that out. Because like you said at the beginning, I mean, everybody has an idea. Everybody has a purpose. You just got to figure out where your lane is.
Right. What makes EQUILIBERTY's approach different as far as traditional funding platforms?
Yeah, I think one is that we focus on wealth building versus just entrepreneurship. We look holistically that everybody, every family deserves those inalienable rights that we have in our constitutions to pursue wealth, pursue happiness, and pursue their purpose. And so that's first. And then our foundation is based off of a principle called binary economics. And so there's a gentleman by the name of Louis Kelso, who you may be familiar with. He's an economist, an attorney, and he was really big on the ESOP, employee share ownership plan that came out in the 80s. And so a lot of that was based on, okay, if you give people ownership into this organization, more than likely that'll increase their productivity. And so looking at it from a communal standpoint, we said, okay, there's certain communities that are historically looked at as being consumers, but not producers. And so if we equip them to be owners in their community, then more than likely they'll have more surplus to be able to trade. And then you'll have an even balance, hence the word EQUILIBERTY, where it's equilibrium, a balance, and then liberty, pursuing your purpose. So it's a kind of a play on words. And so I think that's our unique approach, is that we're not necessarily trying to say you should take something from somebody else's budget. You shouldn't take something that maybe somebody rightfully or from a marriage standpoint deserves to have. We're saying everybody in the community should have ownership in their community, and everybody should have a right to pursue wealth. And we're using a data approach, and also geographic approach to actually solve that problem.
It's kind of approach where the tide raises all boats. Is that what
it is, but you're using geographic or geocoding data to say, well, this boat's sinking. So let's start here in this area of the water versus, somewhere where maybe that boat's already kind of holding their own.
Well, how do you balance that kind of social impact with financial sustainability?
Yeah, it goes hand in hand, right? I mean, I think if I'll take a step back. So in my experience outside of being an attorney, I've worked at nonprofits. And so I've seen how corporations respond to, okay, there's a social issue, we're going to throw dollars at it, but you're throwing it at it from a generosity. You're not looking at an impact. The impact is, okay, X amount of people in the room, you have this program, great job. And there's nothing wrong with that, because you need that in order to get here. What our approach is that make an investment, but treat it as an investment. There's not very many professions, and I'll say, like, for my profession as an attorney, where when I went to law school, you get a clerkship or some kind of internship, and then that's how it prepares you to be an attorney. And sometimes you have to be an associate, et cetera, working your way up. Well, an entrepreneur, you don't have that. There is no experiment. And so you are the experiment. And sometimes people are losing their livelihood behind it. So I say all that to say that with EQUILIBERTY, we're looking at investing into individuals, investing to their families and their communities so that they can become sustainable, not necessarily to say, okay, we did something great here, something good to make you feel good. It's like, no, we want to use data to say, if you go to this street, that using census data or any kind of local data will tell you that more people are renters, or more people can't, their debt to income ratio is top heavy. if you give them financial literacy and then you give them opportunities to be mentored and you give them opportunities to own something, we believe that you'll see that long term, looking down the road, there'll be measurements to show that there's that investment will turn into sustainability. And I think every entrepreneur who's listened to your show or even comes to EQUILIBERTY, I said, you have to put in time somewhere. Like nothing's going to be instantaneous. I don't care what Instagram or TikTok video you've watched. It takes time, and you have to have a level of depth to you in terms of how things work before it clicks. One of my, I guess, most recent experiences I had a couple of years ago, I was GC for a tech company here in Houston. They headquartered here, and then they ended up going public maybe a year or two after I took over as their GC, and I was able to be their GC for the subsidiaries, the main corporation. But that was a light bulb for me. But it took that experience to know, okay, there's different ways to pursue, either exit strategies or growing your business. And I think every entrepreneur should know that, like, figure out what that is that you need, but you're going to need some experience in order to take the helms as a founder of a startup or a small business, or like you said, even a lifestyle business. You still need experience.
Mm-hmm.
Yeah.
Well, I think a lot of entrepreneurs do miss that point. Like, for example, don't start a restaurant if you've never worked in a restaurant. I mean, that would be my approach. If everyone wants to own a restaurant, although there is a saying like friends don't let friends own restaurants, but they are like just like any other startup. They are hard to make money at. But you should go and work and wait tables and be the greeter and wash dishes and see what the GM does and decide, is this that business I actually want to be in, before you go off and try to start a restaurant or any kind of business.
No, I agree. When Ecosystem Builder of the Year, I think one of my colleagues were talking to me about it, and then it reminded me how much time I put in, like working for the Urban League at times when you have an MBA, you're practicing law, but you're also putting out chairs and you're sweeping the floors, but you're really truly, for lack of better words, like you're in the field learning how the product grows before you decide to do a startup like EQUILIBERTY. Mm-hmm. And so I think that's probably been one of my vantage points. So I've been able to get the attention of some of the people who have either invested or become a partner. They're saying, okay, he at least understands the problem, even if he's not the perfect CEO just yet. Yeah. Yeah. One day I'll get there, Chris.
So what role does technology play in driving equity and funding?
It accelerates the process. When I really started in that entrepreneurial community development space, a lot of it was very, what we call now archaic, where you have to write your name on the form. You pass the form to another individual. That individual has to make sure they can read it. What they can read didn't even make it to the computer. What they can read, they have to type it in, and then things fall between the crack. So it accelerates that process of being able to properly serve your customer, and then the data piece. I think that's probably been the most critical or most important piece for EQUILIBERTY, and I think it's for any organization, is that now you can actually tell a meaningful story with data and show how you're impacting. And it's not you trying to sell people, not you just trying to do storytelling, not you trying to play politics. It's like, no, we can actually use technology to show in an unbiased way, this is what's happening. This is how we're going to solve the problem, or that the problem truly does exist.
So are you taking that data and then going to potential sponsors or contributors that might have capital that will allocate to you, that you can then allocate to potential founders? Is that how it works?
That's one way. Mm-hmm. So one way is that we want to be able to make our own allocations, and that's down the road. Mm-hmm. We've, me personally, and my other founders haven't. I did have some partners with a venture capital, and we started that, and we even had a partner in Bank of America. But that's when we had the economic downturn, and banks, Silicon Valley Bank and our bank, First Republic, went out of business. So as a first-time VC fund manager, I wasn't ready for that opportunity. But eventually, EQUILIBERTY does want to be in a position to be able to make those type of investments based off that data. And so we want to use, community partners, corporate partners, financial partners to be able to make those investments, so that we now can say, hey, we have a pipeline of customers. And obviously, just like any financial institution, we know that all of them are going to be successful. But those that are successful will be able to now have numbers that traditionally, and we have federal data that says you're not going into these communities, so you didn't know they existed. Now we have customers that can go into their balance sheets or their portfolios. Then secondly, through sponsorships and other partner opportunities, we want to be able to curate clients or potential investments for them, and then pass them on to them in real time. Because there's some people who may not need, the investments of EQUILIBERTY at that early stage, but they're ready, but they just didn't know where to go or how to approach, whether it's VC or becoming bankable. So we want to use both approach, and then others, again, we'll try to curate a community so that we have a strong enough community that banks now will pay more attention to these communities that traditionally have been overlooked or undercapitalized.
Interesting. Yeah, I think that a lot of businesses do need to focus on the data and collecting the data. And then that's also where AI is going to come in on top of that, right? Because you can't have AI without the data. So the first step in AI is collect the data. Then you can use AI to leverage the data.
Yeah, that was learning. That's the process, because at the very beginning, you hear all these buzzwords. And I was like, machine learning. I was like, well, let's do this. And then I said it with enough people who understood data and how AI works. I said, no, just continue to collect your data. He said, you have enough data probably personally, individually. Then we'll train the model. And then after that, now we have a business intelligence system, which now, Amazon, Microsoft, they all have BIs. And so now we can actually spit out what our partners want. And so we're at the point now where we're collecting the data. Now we're going to release our technology so that we can now onboard people and then start, accelerating that process of what we do with the data. And then obviously the AI will do what it's supposed to do. And hopefully we have a more utopian world when it comes to access to capital.
Yeah. Well, it's going to be a brave new world with AI, that's for sure.
It's here. Yeah.
Speaking of technology, how does your mobile app actually help, wealth building for your users?
Yeah, it's so two ways, right? Through different experiences and just surveys, we realized that it's not always just an access to capital problem in a sense where banks are the problem or the consumer is the problem. Sometimes the consumer is not ready for it because they can't show that they have customer acquisition. And so one of the tools that we put in there was geofencing technologies that it helps out with, digital advertising and allows them to bring on more customers and a rate that they may not be able to afford at that current time. Also, it allows them to start the process of organizing their assets, their story in terms of why they need capital. And so that way we can get them prepared so that when we open up that door, unlock that next piece, they're already positioned to say, okay, I have X amount of customers. This is how I'm getting customers. This is what my sales look like. And this is my profile. And then pass me on to XYZ bank or VC.
That makes a lot of sense. So many people at least have a mobile phone nowadays, right? So putting the app on the mobile, I think is brilliant.
No, thank you for that. Yeah. So we're looking forward to releasing that in Q3 with our community activations. And obviously we'll get the bugs out, and I'm hoping it's commercialized by the end of the year.
Nice. Well, what advice would you give to entrepreneurs that are seeking funding today?
My first piece of advice would work with your team or work with a banker or a financial advisor to truly determine whether or not you need capital. And what I mean by that is when you're working alone or if you're working with a small group and at these early stages, that you're trying to get to the market and in your mind are fundamentally what you're trying to accomplish. Even people who already have a product or service. But if you've never operated at a certain level, you don't know the amount of human capital. You don't know the amount of bandwidth you need to fully fulfill that market's needs. And so you need to talk to somebody who's an objective mind that can say, hey, let me mind map this for you. Let me help you out with your projections. And let's make sure that whatever level or milestone you're trying to meet next, you're asking for that amount of capital. So that way you're speaking in specifics and you sound intelligible to a financial institution, and then now you can start dating them accordingly. Because I think especially in diverse communities that maybe traditionally don't have access to capital, it's almost like you're talking to enemy of the state when they hear this problem. Like, nobody wants to talk to me. It's like, that's not true. Those people, whether it's a VC fund manager or it's a community banker or it's a small business banker or it's a private wealth banker, they all are looking for the right client. It's your job to prove that you're the right client. And so before you go speaking with them, let's make sure that you're well prepared so that when you walk through that door, you are the right client. And then you can now hold the cards and say, maybe you're not the right person for me. I'm going to go look elsewhere, but I'll be in touch.
That's a good point. Yeah, I know exactly what you need or want. And in order
right.
to do that, you probably need to talk to some other people to help you figure it out,
Yeah,
right?
we're subjective. I think
Right.
people don't get it. And I tell people from a lawyer standpoint, people think they don't need a lawyer, or when do I need a lawyer? I was like, you always need a lawyer. The problem is you're so subjective that you're thinking that everything's okay in your house. And more than likely, that's just not the case when you ask. So,
So, Phillip, how are you forging the future this year?
yeah, fast. I want to say that. We want to move.
Punch the accelerator.
Yeah, I mean, the whole team, I'm making sure they operate with a level of urgency. I think we've done our due diligence over the past 4 years, learning the product, getting the investments, learning our mistakes, and figuring out what we want to accomplish in the marketplace. And so this year, we can look forward to expanding our reach into other communities. We're talking to people in the Asian Pacific community, the veteran community. We're expanding what we're doing in the Latino community and then the Black community. But more importantly, it's the technology. So I'm looking forward to your guests and our community at large being able to download the EQUILIBERTY app on their phone and see how it works for them. And if it's not for them, it's somebody else that is trying to pursue wealth in their own manner, but just maybe needs a little help or needs to get on a journey with EQUILIBERTY so that we can make sure they can pursue their wealth goals and hopefully accomplish them over the next couple of years. And then after that, it's off to the races. Like I said, we may not be venture backable, but we do know we're going to need investments to scale and grow. And so we'll be looking to commercialize the product and hopefully grow with partners.
Well, I love what you're doing here. Definitely feeling a need. And I learned a lot. Thanks for coming on the show today to tell us all about it. I do have some socks for you.
Oh, awesome.
You said you needed some money, so here you
There we
go.
go.
Here's the inspiration, some money socks.
I'm going to wear these on all the days when we haven't got our check yet. And also, I run marathons.
There you go.
So these are going to be my marathon socks.
Yeah, that's
as well.
right. I did see that. So yeah, definitely. Hey, well, sometimes running a business is a marathon.
Absolutely. I love what you did there.
Well, thanks for coming on the show.
No, thank you, Chris. Thank you for having me. I loved it.
Thank you.
I know how important staying informed is for innovation and growth. The Forging the Future newsletter brings you the best in tech trends, startup advice, and industry insights. Join our community and forge your future with us. Subscribe now.